Hey, Facebook folks.
@jetlending.com.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership.
Wait, we pay for this?
We do?
Time to get on the right path with Right Path Real Estate Radio with Tom Perry and Jason Bible.
Do the checks clear?
Get the answer to your question that
Bonus.
is keeping you from taking action and succeeding
I remember
today.
somebody told me from the station, we really like you guys because your check's clear. I'm like, oh, thank you.
That's a damn shame because it's we're on Facebook. Yeah.
Oh, yeah.
Get ready. The guys that will put your
Yeah.
peers behind you are on the air now. They're taking calls at 713-785-1817. Toll free 877-881-0271. Here's Tom and Jason.
Hot mics.
Hey, welcome to the show, Right Path Real Estate Radio, 713-785-1817. Well, good morning. We're going to talk some real estate today. We're going to talk about some events that are coming up. Going to be at the Super Investor Meeting tonight.
Super Investa meeting.
Yeah, should be.
Sounds like a Japanese thing.
I can guarantee,
Super.
even though my crystal ball is still in the shop, I'll guarantee there's more than 10 people there tonight.
I think there will be more than 10 people.
Yeah.
I'm amazed when I put a post on Facebook and I'll have, hey, come out and hang out for a little hanging out with Jason. There'll be like 20 people there.
Yeah.
I think there'll be, I don't know, 600, 700, 800 folks there.
Yeah.
So learning about real estate.
There'll be good technical content. There'll be lots of networking. If there'll be all the different trades that you need to have within the industry. I mean, they're all there. So,
And I think tonight I'm going to hang out in the lawn area. I'm going to find a chair right there around the little
a lawn chair.
Yeah, lawn chair. They got. I think they call it the lawn. It's right there
Yeah.
by the General Lee.
Right.
So I'm going to sit there. We're going to have a fire going, and I'll see if we can rotate people through.
Yeah.
Like, so last time I was in, I did that big event in Vegas. I'd sit at a table, and they'd have like 10 people in a round table around me, and then I'd just like do questions, rapid fire, bang, 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 and then they'd all get up and leave, and then 10 more would come in. So maybe we'll do that tonight, and I'll just sit there in the. I think that's what the Redneck Country Club calls the lawn, because it's that fake grass with the chairs. So maybe I'll do that. And you can go on stage and give everybody the good word. I was chatting with Andy yesterday. I did a Facebook Live over this yesterday. We're getting all the case studies from our students because we're going to do this case study thing at the Redneck
Did you see
Country
the case
Club
study
night.
from Matt Downs?
Yeah, it was ridiculous. So, yeah, I mean, what was it? Six houses, $500K in net worth.
Yeah.
Over 6 houses.
Yeah. And his cash flow is ridiculous. I mean, it's just kind of it's a part-time gig. He's doing all right.
We've got him set up down there that he is now getting deals sent to him.
Yeah.
Like he tells me, he's like, I really don't do any marketing anymore.
Right,
People
right.
just call me with
Sure.
these things.
Right.
And so I'm like, man, that's perfect. And I'll never forget when he first came on board. I said, look, if you don't sign up, I'm going to go start a house buying business in Corpus, because it's like these smaller markets. Using the sophisticated techniques that we have in these smaller markets is like kryptonite, right? I mean, you get in there and they're like, "Oh my gosh, it's crazy." So, yeah, he is killing it down there. I had no idea he was doing that well when he was sharing those numbers with me. I was
Andy
just
last
blown
night
away.
showed me that sheet and he goes, "Hey, we need to pick a case study." I mean, which I'm like, you could pick any of these. I mean, there's not a bad deal in here. So, in fact, what I really want to do is talk about the aggregate numbers. That this is what he's done in 10 or 11 months, and how many people work an entire 10, 15, 20 years and don't accumulate that much net worth.
Yeah, accumulated $500,000 essentially between cash flow and depreciation and equity. $500,000 in net worth in less than
A year.
No, he's been with us a little longer in a year.
14 months?
14 months,
Yeah, but he really didn't do anything for like he didn't buy any houses for like the first 3 or 4 months.
That's true.
Yeah, so it's
in
really been 10 months.
Yeah, 12 months that he started, he's increased his net worth by $500,000.
And
that
if you
means
look
he
at his
made
cash
$500,000
flow
a year.
numbers, I mean, he's averaging $500 or $600 a month cash flow per house.
It's insane. Over 6 houses, so $3,000 a month in
Yeah.
cash flow.
Right.
That's insane.
Yeah.
It's absolutely insane. All from part-time
There's probably
gig.
somebody, in cryptocurrencies that's done better than that, though.
Whatever. Crypto.
Yeah, man. So,
I figured out what the title of my first book is going to be.
Yeah.
And I'm going to start working on it, and it's going after all this nonsense, because what you realize is that none of it works.
right.
Like I can guarantee you what you're doing if you are not in real estate. fascinating news happened this week, right? Sean Hannity came out that was allegedly a client to Michael Cohen, which I don't see what the big deal is because Cohen is a real estate attorney and he's a business attorney. So I'm like, people think this guy gets paid to like, hide women. And I'm like, that's not what he does. You go and look at the history. He's got like 3 decades.
He's not like the mob problem solver, right?
No, he is the business guy, right?
Sure.
And so we have an attorney that we use if things ever got real nasty. We got a guy he's a shark, right? He goes out and defends us. It's probably a good way to do it. So that's what this guy does. And so of course Trump had a problem with this lady, and he didn't want it to come up during the election, and so he's paid her and all, or allegedly. We don't know what the whole story there is. But what's fascinating is
it's
Sean
Hannity 10 years ago. Do we really care?
I put a Facebook post up that had this little meme, and it said, Bill Clinton paid Paula Jones $850K,
right?
And she was a state employee when he was harassing her,
right? Sure.
And this was a consensual relationship between a billionaire and a adult film star, right? So. Anyway,
and he paid 130.
He paid 130.
Somebody's a better negotiator.
Somebody's a little better.
Yeah.
There's a reason somebody wrote The Art of the Deal. Anyways, so when I look at where was I going with this? Oh, the Michael Cohen thing. And so Sean came on his show and he said, "Hey, I called him for some real estate advice or some other advice, something like that." And he said, "I've always said I hate the stock market and I invest in real estate."
Right.
And I always find it fascinating when you get somebody who's wildly successful like that. Because you look at a guy like Sean Hannity, and I'm not a big fan of his show. I mean, he sounds like a decent guy and all that. But Sean is, you want to talk about somebody who's got connections.
Yeah, of course.
He could call the White House and he would get a call back, right? He's that guy, like Rush Limbaugh is that guy.
They may not even call him back. They may just say hello.
Yeah, that's right. Yeah, hold on one second, Sean. Let me get DJ T here on the phone for you. But anyway, so this guy's literally got, what connection does he not have? Now, George Soros is not going to pick up his phone call, right? So, but anybody on the right.
Maybe to cuss him out.
Yeah, that could be. He could call up the Cook brothers. And they totally answer the phone and go like, "Yeah, man, invest in this and do that." And the guy's got billionaires on speed dial, probably on text. And what does he choose to invest in?
Real estate.
Real estate. It's not the latest tech startup and what's going on in crypto and all that nonsense. It's like, man, I invest in real estate. Now, he probably does a lot of commercial. He probably does a lot of REITs and private placements, that sort of thing. But he's in real estate.
Surely he has a crypto farm, though, right?
Oh, yeah, I'm sure he's got, his New York apartment.
He calls his a ranch.
Yeah,
He's got a crypto ranch.
I've got a cryptocurrency farm thing.
Yeah, sure.
Is that like Farmville? Is that like when you get on Facebook and you
like
buy sheep or something? I don't even know how that thing works. But anyway, so what I find so fascinating about that is
I'm just picturing you buying sheep on Farmville.
Is that how it gets? I've never played the game.
I've never either.
I get that and Candy Crush invites, and when I get them, I just block those people on Facebook because I'm like, I'm not that guy.
You're right.
So, in any case, I always find it's always very telling to me what people do to become successful, and it's businesses and real estate. In fact, I just pulled up Cohen's profile just for grins. I went through and read it on Wikipedia. He was an attorney, and he started in taxis in New York. He owned a whole bunch of taxis and owned part of Yellow, essentially whatever the Yellow Cab service was there in New York, and then went on to real estate, and then went into law, and then got pulled into the Trump organization, then helped build all that. And so it's real estate, folks, and the more you research, the more you dig and you dig and you dig, and you realize that none of this other stuff is going to work. I'm reading a great book right now, again by Aaron Clarey. I need to get him on the show. I just need to reach out and send him an email. But I'm reading his book right now called Enjoy the Decline, and it's all about how starting with all the ERISA stuff in the 70s, where our preferred vehicle for retirement are stocks and bonds, and principally stocks in mutual funds and ETFs.
Well, before that, it was the pension funds, right?
Yes,
yes. And so because we had a defined benefit
that's right,
program, and every company set up these pension funds, and then what happened is that the companies weren't managing those well, and actually
and still aren't.
Raiders would come along and buy the companies, take all that cash, buy other companies, and grow it and grow it, grow it. And so then when you really mess with people's retirement and don't do that well, then that can be a problem. So then they came out with the defined benefit plan.
Well, you know what's so funny? Let's go back to the corporate...
The defined contribution plan.
Let's go back to the corporate rating, and essentially all these companies... Let's go back over that because a lot of people miss that.
Yep.
back in the 80s and 90s when all those hostile, well, I shouldn't say 80s and 90s. This was back in the 60s and 70s and into the early 90s.
Yep.
You saw a lot of the corporate takeovers, hostile takeovers, were really to get after the cash balances in these pension funds.
Right.
That's what all that stuff was.
Well, because all of that was sitting in cash, and the reality is all that money should have been invested so that employees could have had less money. And so these raiders came along and said, hey, there's $4 or $5 billion in cash sitting there. I can go and buy these other companies, generate more. I could go buy GE, I could go buy these other companies, and have access to their pension funds and continue basically create this giant conglomerate. Right. And because of all that investing, getting the return on and more cash flow and then pay it all back, right? But it didn't work out that way.
Well, here's the important piece. Is Social Security all that different?
No, it's not at all.
Because there's no lockbox. Actually, teachers' retirement in Texas, I can tell you, is no different. For those of you who are supposed to get that match and that 7.5% or 8% or whatever it is, it's a line item on a financial statement, but there's no cash balance anywhere with that money.
It's no different than what Bernie Madoff was doing.
It's exactly what it is. It is the exact same thing.
Yeah. But it's illegal when he did it.
That's right. But it's not illegal when the government does it.
Of course. There's a lot of things that we can't do that they can do that's,
In fact, there's a great article in the New York Times.
Let's continue this on the other side of the break. The music's starting. So you're listening to Right Path Real Estate Radio, 713-785-1817. Hey, thanks for listening.
Mike's off.
All right. Hey, good morning, everybody. Brent, Ginger, Veronica, Andy, Denise, Jeff, Matt. Yeah, Matt, just saw your... Andy was showing me we're going to use some of your stuff for a case study tonight, and, man, you're killing it. So congrats. And good morning, Nora, Brian. Long time no see, Brian. Maybe I'll see you tonight. Hey, good morning, Colby, Daniel. Good morning, Nicholas, Coetta, Sebastian.
For optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to
hey, good morning, Joel.
And much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish.
Hey, where did you go to a school for your motorcycle license?
I did.
Which one did you go to?
The one down in Sugar Land. The Harley Davidson place.
Okay.
Yeah. 3 keys to success.
Yeah.
Use a detailed scope
They
of
did.
works
They have
every
upstairs on the
maintenance
second
job.
floor, back in
Train
the
and
back
maintain
left-hand
quality
corner. They've got a
crews once it's
classroom
done
thing
right,
there,
and
and
complete the
then
work in a proper
they
order
keep
so
the
it gets done
motorcycles in a
fast.
trailer
Managing
over.
it yourself?
Do you know where
Work
762? You
Fast
turn
Track
right,
Remodeling
and you know where the
really does
Walmart
make it all.
is.
So give
It's
us a call
back.
today
You know where the
at
library
832
is down. You got
742
Fort Bend Country Club.
9992. Again, that's
Good.
832-742
59 to 762. You know where that is?
Oh, okay, yeah.
And then
yeah.
take a right.
Yeah.
And then you go down there and you go down a ways and take a left. There's a Walmart. And there's a high school back in there. And they've got this trailer they store a bunch of Buells in. And we use those for riding. So.
We ready?
Yeah.
All right, fellas, hot mics.
Hey, welcome back. Right Path Real Estate Radio, Practical Real Estate Investing. Jason and Tom live in the studio. 713-785-1817 if you want to call in and ask any kind of questions. So we're going to be at the Super Investor event tonight.
Mm-hmm.
And then we've got a big event. We've only done it twice before, I think. How to lose money in real estate.
Yes.
Yeah.
I'm going to teach tomorrow night how to lose money in real estate. And it's always a super popular event for us because nobody ever tells the truth in this industry, I swear. Like, oh, we only make money in real estate.
Yeah,
I'm
everybody
like,
only shows big checks, and they
That's
only
right.
show, yeah.
So we're going to teach a class. I'm going to teach a class Thursday night.
Which I always
on how to
laugh
live-
when people are getting checks at a closing.
Oh, yeah.
Yeah, instead of getting, have we ever gotten a check at a closing?
Who gets checks anymore? I don't
just
have time
gets wired.
to pick up a check. Yeah.
In fact, it's a funny story when we sold our very first deal, and we talked about framing, like our first dollar of sales, but you can't really do that in real estate. I think our first deal that we actually closed on the sales side was a wholesale deal, right? We bought 2 properties, and we were under construction on both those, and then we wholesaled one. So our first real cash into the company outside of yours and my contribution was a $47,000 wire for an assignment. And so it's like, well, we're not going to frame a wire receipt up on the, so we took the door from the first house that we actually flipped.
Yes.
As our token of so now it's in our base camp room.
Yeah, so we got our 2 real estate companies that we started. They have the front door from the first 2 properties we bought. Yeah, they're both in there in the base camp room now.
Yeah.
But to go back to this retirement thing.
Yeah.
I mean, when you sit down and look at it, America's retirement vehicle are really mutual funds and ETFs. And the problem is that without any regard to market fundamentals, every month the American investor is putting through their paycheck money into that market.
Blindly.
Yeah. No idea what
Yeah.
I know I'm invested in this mutual fund that invests in actually they call it the FANGs, right? It's Amazon and it's Google and it's Microsoft and it's Facebook and so it's just investing. Money's just getting thrown at stuff without any regard to what you should invest in.
Yeah, business common sense.
Which is amazing to me because people when they make the transition to real estate, they go, "Well, is this a good deal? What's it worth? How much is it?"
They actually do some analysis.
Yeah, and I'm like, "Well, why do you?" Look, I'll say, "Well, I understand why you're asking those questions, but let's look at what you invested in before."
Yeah.
Or if you're still investing with your 401k, IRA, whatever from your employer, what are you invested in now? Do you ever sit down and look at the market's fundamentals? Do you ever look at, I don't know, the company's fundamentals? Do you ever look at, the rise of their stock price? Maybe it relates to their corporate buybacks based off how much debt they're picking up. No, I don't look at any of that. I just know my company has a match and I just pour money into it. So to compare what you're doing in retirement with what you're doing now to real estate, you really need to look at what you're doing in your retirement. And most people don't. They just, I know I put more. This is how insane American retirement is. I know if I put more money in, the market will go up.
Yes, that's true.
And more money I put in, the more it will go up. But what happens when the market stops going up or people stop putting money in?
Yeah, that's the real question. Will people ever stop putting money in?
Yes.
Yes.
When they start retiring and they start dying.
Yes.
I mean, that's essentially what will happen, right?
But there'll be more people behind them putting money in.
No, there won't.
Right.
See, our population is shrinking.
Yeah.
Actually, there's this great study. If you look at the United States, if you look at their the growth rate, GDP growth rate. So the last 40 years has really been about 2.5%. The previous 40 years, from like 1940, late 1920 to about 1960, late 60s, early 70s, was twice that, 4.5%. And what a lot of people don't understand is they'll say, well, the difference between 2.5% and 4.5%,
only 2%.
It's only 2%. It's not that big a deal.
Right.
Well, they don't understand compound annual growth rate over that long term, right?
No, they don't.
So
2% on a big number is a big number.
It's a big number. So when you look at what your retirement is invested in, every day you're investing in companies that are bringing less value to the marketplace.
Yes.
So you're investing, truthfully, you're investing in something that's technically depreciating.
Yes. Yeah, but Jason, doesn't real estate also technically depreciate?
Well, the building does.
Yeah. Right.
Technically, that is true.
Yeah. Yeah, here's the other thing that people
But
don't
I also
realize.
don't invest in real estate for depreciation, right?
Right. Well, that's true. That's just a bonus,
right?
From a tax standpoint.
Mm-hmm.
So, well, it actually, it's interesting because it's appreciating and depreciating at the same time, right?
Correct. What's amazing is real estate is one of those assets that are inflation adjusted,
right?
So,
well, this is one of the things I had a discussion. I went to lunch with my dad yesterday, and he said, "Hey, would you go over some of those numbers with me again?" And I'm like, "Yeah, I'd be happy to." So. You buy a $150,000 house, and
yes.
even if you buy, let's say it's worth $150, and you pay $150, horror of horrors, right?
You paid retail.
You pay retail, right?
Just like you're doing on the stock market every day,
right?
But
yeah, no different there, right? But let's say that you go and get a bank, and you're not, you're just all you're doing is you're buying a retail ready house. So you can put a tenant in there right now. You put $30,000 down, so now you owe $120. So all you've really got in the deal is $30,000. Now I cannot go buy $150,000 of stock for $30,000.
No,
I can only best I can do is on $100,000 worth of stock. I can get $150 with margin, but I may have a margin call in the future, and I don't want to get in all that. But so basically, I'm leveraging a $150,000 asset with $30,000. So let's say we've been averaging 7% appreciation over the last several years in Houston. Some markets maybe a little bit higher than that. But let's just say we're not trying to get the top of the market. Let's just say 7%. But it's not 7% on the $30,000. It's 7% on the full $150, which that's $10,500. Well, if it's $10,500, now that's your increase in appreciation, but that you've only used $30,000 to get that.
Right.
So it's really about a 35% rate of return on your $30,000 invested if you pay retail. Now, that's practically guaranteed. I mean, it's like, hey, past performance may not, investments involve risk. So all the disclaimers, blah, 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 okay? But, I mean, you can't get anywhere close to that kind of return guarantee safely and securely in the stock market.
I will tell you this. Dot Sauer, I've listened to his presentation a couple times now, and he said something really interesting.
Yes, I know where you're going with that.
If you bought at the peak and sold 10 years later, it doesn't matter what peak.
Yeah.
It doesn't matter what the market was doing 10 years later. You made money when you sold.
Yeah, right.
So people get so whipped up. This is what I like to call majoring in minor things.
Right.
They try and call the peak of the market.
Right.
Well, I can't buy now because it's the peak. I can't invest now because it's the peak. And in single-family real estate in Texas, it doesn't matter.
Yes.
It absolutely does not matter.
That's correct.
It just doesn't. So
I was explaining, and that's just one metric. So now, if you have a loan, you've borrowed $120 on this $150,000 asset, right? And so PITI should be about $1,050. Let's call it $1,100, right? That asset should be renting for like $15. It could probably be closer to $1,000. Should rent for $1,500 a month. You're going to make, even if you hired a management company, you should make $300 a month net cash flow.
Yes.
Which gives you about $3,600 a year which is, again, another 12%. Most people would just be happy with the 12%. Forget about the 10.5 appreciation. They'd be just happy if they could get a guaranteed 12%.
Yep.
So what I don't understand is why more people aren't jumping in.
I don't get it. It's the math I keep telling folks is. It was so funny. I was chatting with the banker last night. So banker called me, and of course, banker's in L.A. So he's on L.A. time. He always calls right around dinner time.
Right.
So I call him back.
It's the end of the day for him.
Yeah,
workday,
it's
right?
like 4 or 5 o'clock over
Yeah.
there, and it's like 7 here.
Right.
So call the banker back, and we started talking about lines of credit. And one of the things we're going to start doing with our folks inside RightPath in our our clients is for those that are doing long-term buy and hold, possibly setting them up with a line of credit where essentially they've got checkbook control on this line of credit. They buy $5-10 million worth of real estate, and then you refinance the entire thing out as one whole package. And so we were talking about what that looks like. And then the second thing we were talking about is what are all these non-performing notes going to look like? How are we going to buy these distressed assets? And I think people incorrectly assume that MLS is going to be flooded with tens of thousands of flooded properties.
Yeah, it's not going to happen.
That's not going to happen. What it's going to end up happening is guys like us, and I don't want to say like us because we're really one of the biggest in town, are going to get a phone call from a special asset manager somewhere that says, hey, look, would you guys buy 50, 60, 80, 150 houses at a time? And we go, yeah, sure, why not? And we already have the financing set up, so we're going to buy these things. We're either going to buy them as non-performing notes and foreclose and take the asset back, or we're going to buy them as foreclosures before they even hit the market. The idea that the bank is going to do what they did in 08 and 09, where they had to deal with individual investors and it took forever to sell these things and close them and, you know, go through this constant rigmarole of one house at a time. There will be, don't get me wrong, there's going to be foreclosures out there, but it's not going to be like 08 and 09. They're going to go to the big, you know, the big deal makers like us long before it trickles down to other folks. So what's that mean for people that are in a group? We're going to buy 50, 80, 100, 120, 150 houses at a time, and then we're going to sell them inside our group. You know, you and I will keep 10 or 20 of them. We'll sell the other 50 or 60 of the folks in our group. I mean, that's how it's going to work. Just because these banks are not going to be able to manage that many foreclosures all at once to sell them all at one time so they get through. Because here's the whole thing. It's a throughput issue,
Yeah,
right?
right, yeah.
They want to get through the foreclosure stuff as fast as possible so values pop back up. So they can go back to lending on single-family homes and all that other stuff. So
1 minute.
that's what's going to happen.
Yeah, it becomes a logistical nightmare for them to do them in onesies and twosies.
Yeah,
Yeah.
it's a total pain in the rear.
And the truth be told, they really don't want the liability for very long. Yeah.
Not with these moldy, hairy houses. I'll take
Right.
all the moldy houses you got.
Right.
So that's essentially what's going to happen. So go back to your return issue. It's like it's such a no-brainer. And then the one thing I look at is you tell me what a better investment is.
Yeah.
What's a better investment? Buy more stuff on the stock market that we know is completely inflated and PE ratios are at historic highs. I mean, it doesn't get any more peakier. Maybe is a better
Yeah,
way to
right.
put it. This is why multifamily is just completely priced out of its mind, because the smart money looks at the stock market. You get guys like Sean Hannity. You think Sean Hannity can't get the best advice?
How about this?
best
On the
advice
other side
from
of the
Glenn?
break, let's talk about, so because you know what, one of the things Dotzauer said is in single family, I don't care what peak you buy at, that if you sold it 10 years later, and I don't care what time period you sold it for, you made money.
You made money on the deal.
Why can we not apply that same thing? Because so you can't. What you basically are saying is you can't buy single family too high, right? Mm-hmm. Why does that not apply to multifamily? We'll talk about that on the other side of the break. You're listening to Right Path Real Estate Radio. Thanks for listening, guys.
Mike's off.
It was me, yeah, me singing I love rock and roll.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825.
Oh, cool.
Or you can reach us online at
awesome.
foundationcheck.com.
Yeah, right.
Foundationcheck.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk.
You want to see something kind of interesting?
NextGen Appraisal. NextGen is a group of appraisers specializing
So
in
that's,
we understand that investors aren't
and then
looking for a
look at
number
these
of what your
packages.
property is worth, but a comprehensive analysis of the market. Give NextGen a call at
This is all the stuff he has for sale. Look, check this out. In Georgia, in, let me show you all the places he's doing. Is that crazy?
Time is money in a real estate deal.
This is commercial stuff. That's just land. That's
non-responsive. You could lose a deal like that. You need a quick turnaround on quotes,
Huh?
binders. The agency for that.
Oh,
is
yeah.
Benchmark
Yeah, yeah, yeah.
Insurance of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it.
Radio.
Oh, yeah.
We need to get Dave,
Yeah.
Dave
Oh, yeah.
back on.
Oh, yeah.
Oh, can you send Dave a text?
Yeah.
I don't have his cell phone.
Yeah.
Send him a text and ask him
Benchmark has been in business for over 10 years.
net how much they want to make per door.
Okay.
Is it? And I don't say how much they want to make, but what's a good number? Is it $50 a door? Is it $100 a door?
In multifamily.
Yeah.
That's 281-569-4353 or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353 or online at benchmarkbroker.com.
All right, gentlemen.
Hello, real estate investors. Do you need a lender that moves fast?
I
as the
do
speed
need a
of
lender.
jet to fund your investment property?
Fast as a jet.
Lending will help you purchase
They are pretty
properties
quick.
quickly
They are.
with as little cash out of pocket
Do you remember that deal early on that we?
Yeah, we were like, hey,
the day before. It was like 4 o'clock in the afternoon, and we had like a 10 o'clock the next morning closing.
Hey, I think I called John. Hey, Johnny, I need like 150 grand. Oh, okay, man. You want to send over the detail? No, I need it tomorrow. Okay, when? 8 a.m. All right, man. We'll do it. Just because it's you guys.
Right.
Like, okay.
That's when relationships matter. that
was hilarious.
Yeah.
Oh, and don't forget about our
Okay.
famous Third Windshield
I think we got
Super
some money.
Investor Networking meeting. Lots of fun. Lots
Like
of
they
great
got,
real
you know,
estate talk. We'll
10 or
see you
20
there.
bucks sitting over there. Oh, so he does hard money, huh?
Yeah. Yeah. Yeah.
Old school.
Yeah.
All right, guys. Hot mics.
All right. Hey, welcome back. Right Path Real Estate Radio. So before the break, we were talking about that Dotzauer made a comment last time he was in town. He was speaking at the Super Investor meeting. and he said, hey, you could have bought at the highest peak that there's been in single family and sold it 10 years later, whatever peak you want to pick, right? Sell it 10 years later, and you would have sold it and made money.
Right.
You couldn't. There's no 10-year period of time that you could have bought it at whatever period you point. Go 10 years later, and it was down from 10 years previous. That you
Correct.
could have lost money. Now that's assuming you're not buying a $8 million house. And that we're talking about in the middle market. We're not talking about California, right?
We're talking about rental properties.
Yeah.
We're not talking about
buying a $50 million
No.
single family house in Beverly Hills. That right. So none of that, right? Now, why does that same thing not apply to multifamily?
Well, it has to do with cap rates.
Yeah.
The leases, amount per unit they're leased, and the occupancies.
Right.
And the problem with that right now is that cap rates are at all-time lows. I guess technically cap rates could go to like 1. I've seen stuff in California at 1.5% and 2%, which is insane.
Yeah, because here's the thing: is there's alternative investments that are just as safe as that multifamily that are at better returns than that 1.5%. You literally have to be just sitting on so much cash that you've just got to park it someplace, right?
Yeah,
yeah, and that your cost of money is 0 in order to make 1.5% work.
Yeah, you're buying. You really are buying for appreciation sometime in the future. But like you said, I mean, it's 100% cash.
But it could only appreciate if rental rates went up, because that's the only appreciation. Because it's not going to appreciate based on cap rate.
Well, yeah, or if occupancies go from 95 to 100%. But even then, it's not
moving the needle that much. But then who's going to be the buyer for that? I mean,
I don't know. It's California nonsense.
Right.
That's what we see a lot of the multifamily stuff going on right now. I mean,
Yeah.
it's just We sent a text message to a friend of ours that owned at one point thousands of units, and it's like, well, at what point are you a buyer? And does this stuff even make sense? And then you read all the horror reports that essentially say, hey, if you can buy single family house for under $200,000, that's a dinosaur. I'm telling you guys, look at even the last 5 years. Some of these neighborhoods have appreciated 15% per year. And here we go. We're out chasing multifamily. Here's the other reality of multifamily. And I talked about this last week. And that is, there are about 2,700 multifamily units in and around greater Houston area. It's about 700,000 doors. There are only about 100 of those that get sold a year.
Yeah, right. Yeah.
It's 10 a month. And here's what I can tell you. Between Dallas, Houston, Austin, San Antonio, there are a number of real estate groups that teach multifamily. It would not surprise me if we have 1,000 new multifamily investors in all of those markets in the entire state.
Yeah.
And if you look at the entire state, I would guess maybe 250 multifamily, complexes get sold in a year.
Yeah,
tell
but Jason,
me 1,000
I'm just
new
looking
investors.
For a deal.
You're going to be looking.
That's why I love when people blast out. Hey, send me all your multifamily deals because I've got cash buyers.
Ooh, cash buyers.
Cash buyers.
Yeah, there was a seminar this weekend with 500 people in the room that have got $1 million in cash
each,
right? And they want to be real estate investors too,
right?
And they're looking at the same 10 deals you are in Houston, Texas,
and saying they're not a deal,
and saying or they're saying I just need to. But
Jason,
my money
you don't understand.
To work.
I have it under contract.
Yeah,
I know a guy.
I just, it's so the multifamily thing is so stupid to me, just because there's not enough supply. And you got to think there's probably let's just take a conservative number. Let's say there are 250 people that enter the multifamily market every month in Houston. Would not shock me if it was that many. You get 250 a month that are chasing 10 deals. I mean, the numbers don't work. Statistically speaking, it is highly unlikely if you go to a multifamily class and learn how to be a multifamily investor that you will ever buy a deal. There's just not enough of them. Even if you're the 1%, I mean, there's just not enough of them. However, when you look at single-family houses, we sell in this market about 10,000 houses a month. There are plenty of single-family houses to make you millions of dollars. There are not enough apartments. In fact, I will give you an even better metric. There is a reason that Wall Street is not building a whole lot of new REITs for multifamily. They're all going after single-family because that multifamily market's played out. There's just not enough assets. There's not.
It's really the same problem we have in the stock market.
Yeah.
There's more money to be deployed than there are assets to buy.
Yes.
And so because of that, then people start overpaying for the assets because they're willing to take less and less return, right? And they're willing to take more and more risk. So there you go. So multifamily is not the thing right now. We're not saying we're anti-multifamily. We're just saying that you can't find a deal. No, but Tom, you don't understand. I'm going to work really hard. You know, it's interesting, this group of people that and I'm not anti Tony Robbins, right? or Anthony Robbins. But there is, ever since Tony Robbins came along, there's this, if I think it long enough, I can make it.
I can do it.
I can make it happen. I'm just going to outwork everybody, and I'm just going to work super hard and outwork everybody. And well, the reality is that you can work really, really hard, and what you end up finding is that people start, redefining what a deal is. Where like a 7 cap on a triplex, and why would you use cap rate on a passive triplex, right?
I don't get it. Yeah.
And so it ends up just not making any kind of sense. But people fall for this. And so it's like multifamily really is when you start talking about, 200 doors, right? Mm-hmm. Or you can have a couple of different projects in a particular area. But there's no deals in multifamily right now. And I'll just say this for, nationwide. But that doesn't fit the narrative of what the gurus are teaching.
I can tell you Texas has been, it was so funny. I've told the story a couple times. My wife had her whatever it was, 15th year high school reunion, and I was hanging out with a couple of folks, and one of them was a banker for a very large bank on the commercial side. And I asked her, said, hey, how's business? What have y'all done the last couple of years? What are you doing now? And she said, the bulk of our commercial lending was in multifamily. And I named a couple of student groups here around town. She said, oh, yeah, we've lent to that, people in that group and in that group. And she said, but we're no longer lending. And I said, what do you mean? Like, because there's, surely there's a good deal. She goes, no, you don't understand. We are no longer lending in multifamily in Texas. We think it's way overbought. We think there's too many units coming online. There's a lot of Class A that are being moved at like 4.5, 5 caps. It just doesn't make sense for us to be in this market anymore. That was 2 years ago.
Right.
So,
and I don't think their appetite for lending in that market has changed.
No.
Yeah.
When the conservative banks, the ones that are not broke, like the big banks are, when the conservative banks are stepping away and saying, we're gonna go lend our money somewhere, or we're not going to lend.
Well, what's that tell you that? Okay, if that's 2 years ago, anybody that bought a property just, let's say 6 months before that, right, or maybe a year before that, they're going to have a refinance issue in another 2 years or so.
Yeah, how do you refinance? It's going to be interesting to see what happens with interest rates, watching the 10-year and all that other stuff. But anyways, to go back to the bigger issue is, here you are sitting in a seminar with 250 of your newest friends, and you're all going to go out and buy multifamily, but only 10 a month get sold in this market. You tell me how that's going to work.
Yes.
It's not. That's the reality. Now, can you put 250 people in a seminar and teach them how to do single family, and there's plenty of deals out there?
Yes.
Absolutely. Absolutely. There's 10,000 a month in Houston. There's probably 8,000 or 9,000 a month in DFW. There's 5,000 or 6,000
a few in Corpus.
Yeah, Matt seems to be buying. He's buying all of them.
Yeah. About to be another one in Point Comfort.
Oh, yeah, that's right.
Yeah.
We're buying one in Point Comfort, by the way. So the reality is that there's just not enough of these things. And there's not going to be. You also I was looking at a chart. Again, you guys have to pull this up. If you Google, let me pull the original article up. If you pull up, where is it here? Houston multifamily, Houston multifamily market outlook. It's on the Texas A&M Real Estate Center's website, and it's from TransUnion, and they break down the numbers. I mean, they just tell you straight up. There's just at some point, if you look at the sales volume by unit, it is at peaks. They're selling a massive amount of these things. So until there's another crash, there's just not enough inventory. I mean, it doesn't make any sense. In fact, here's a great one. Here's a great metric for you. The 10-year annual average is $805 per unit. That's lease rate, $805 a unit. In 2017, the average lease rate is $1,000, meaning it's 25% above the 10-year average. Well, what does that tell you? It tells you that I don't know if we're at a peak, but man, we're getting close. We got to be getting close. Where is the steam on this thing? Where's it run out of steam? Look at these occupancy rates. I mean, we're at an 89.4% occupancy rate.
Which is down from the peak, right? So if you bought in 2013, 2014, odds are your occupancy is down from where it was when you bought it, right?
That's right.
Which means that, you've lost money on that investment so far.
That's right.
People, but it's only down 2%. Well, that
2% is a big number.
It was 2% of total rent. So if you're talking about, the average rent is going to be let's for simple math, $1,000, and let's say it's a 200 unit. Mm-hmm. So it's that you're bringing in $200,000 a month if it's fully 100% occupied, right? Mm-hmm. And so take you go from 91% occupancy, so it makes it like $182,000 of revenue coming in instead of their $200,000, and that's going to drop to $170. So you're losing $10,000 a month, $120,000 a year on a cap rate that's down around 4%. That's a big number.
That's a huge number, and I think these guys that are just and I'll tell you what's going to be sad. It's not the savvy real estate investors, because I've had this argument on Facebook before.
Yeah, right.
It's not the savvy investors that are going to lose because most of those guys are not in the game anymore. They've sold mostly everything they've got.
That's a $3 million drop in value on a 4-cap. Yeah.
That's insane.
Yeah.
And even an 8-cap, that's $1.5
just a 2%.
million.
That's what people don't realize is that the numbers matter. And I agree with you. You were making a really good point. It's not the savvy real estate investors that we're worried about. It's the guys that are passively putting their money in kind of blindly that are investing. I mean, like the same guys that put money in blindly that invested with Bernie Madoff or, or Facebook for that matter.
It always goes up. It always goes up.
Right.
We're going to be millionaires. Right. No, you're not.
Right. No, you're not. You're listening to Right Path Real Estate Radio. Thanks for listening, guys. We'll be back after the break.
Lights off.
Hey, good morning, Andrea.
Real estate investors.
Good morning, Daniel.
If you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into
it's interesting. They start getting the absorption numbers.
Yeah.
The 10-year annual average for absorption is 12,210 units, and there's like 5,000 to 8,000 units coming online every year.
Yeah.
It's like,
for more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
your 10-year average for gross rents per square foot is 0.92, 92 cents, and it's up near $1.11.
For real estate investors throughout the country.
It's absolutely insane.
Has CPAs, lawyers, bookkeepers, and estate planners with one common goal: helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
I sent them a client at one we were talking about yesterday.
Inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online.
It's perfect. Just as I bought my Garmin, the new one's coming out.
Isn't that the way it works?
Like a game of chance.
Let me see if this 130 does power.
Get.
I wondered why they were on sale.
As a whole, doesn't carry a license, nor is it regulated.
Doesn't do power?
No, that's the price I paid for my 520, which is fine because it's going to be better than this one anyway.
The best foundation analysis in today's market. Remember to check before ever repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
It says it's Ant Plus, so I bet it does.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip rehab or a rental rehab. No more managing it yourself.
Look at this Garmin.
No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source.
So these folks here, do I want to close the file on that, or
I don't see that. I mean, how much is it?
It's about to do an entire zip code is it's like $3,000 for 6 months.
Are you a realtor or seller that is concerned about the new
to take all 5 slots
on time? I'm
or
Jennifer
like
Hernandez,
5
Senior
for
Loan
a year,
Officer
for like
at
40.
Legacy Mutual
So
Mortgage,
I don't
and we
understand.
have
What are they
mastered the
selling?
30-day
Just
close.
like data?
We close
No.
on time,
What they do
accurately,
is
and
they
with
do an
tons
ad
of
program
communication.
on.
You'll have a dedicated
So the actual
team
leads?
of a coordinator and a contract to close
Yeah, it's supposed to be.
Give me a call
what they
today
pay,
at
basically are doing monitoring social media for
719-3611,
conversations
and let's talk about how we can help
through
you
algorithms,
on your
right?
next
On
transaction.
divorce, blah blah blah, blah,
Yeah.
right? And then so they design
Are some
ads
returns getting in the
that'll
way of
be.
your
It's basically
retirement
banner
plans?
ads, right?
Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, gentlemen, hot mic.
Welcome back, Right Path Real Estate Radio. In our last segment, I want to tell you to go to rightpathrealestate.com. Go to our website. You know, I tell you, one of the favorite events that we do every month is the bus tour.
Oh yeah.
You know, it's amazing. In fact, it's funny because we've got Ryan just joined us recently, and Ryan came on board and goes, you know what? When I went on the bus tour, he goes, I've been helping people in real estate for a really long time, and I hope I can say this publicly, but he said, I was really humbled by how much knowledge was imparted just in like 4 hours of time, walking, you know, I think we hit 7 houses, and just, he said, how much I learned. And when somebody that's been doing this for, gosh, I guess I met him originally back in like 2013, so he's been doing it for sure, a full-time active, 5 years. I mean, one of the top real estate agents in the entire city. I mean,
yeah, what is he, like in the top 20 or something?
Yeah,
I mean, it's something
top
ridiculous.
15, I think. It's crazy. Yeah,
has 160 houses a year, and he's like, I learned so much on that bus tour. So, and the bus tour is a whopping $150.
Yeah,
you go to our website, sign up. We keep it very small. This is not like a commuter bus with 200 people on it.
Yeah,
we only have 20 seats. That's it. It's a very small deal, and it's the first weekend, first Saturday of the month, so it's May.
Cinco de Mayo.
Yeah.
Cinco de Mayo.
Yeah.
Oh yeah, it's May 5th. So we will. I guess we'll go out afterwards, huh?
Sure, why not?
It's Cinco de Mayo, what we call amateur night. So we'll go out.
And then we've got our event tonight, and then we've got a huge event tomorrow. How to lose money. Huge. How to lose money in real estate. So now here's the thing. We don't want to teach you how to lose money, but if we show you the things that we've learned and the deals that we've lost money on, then you can avoid those things, and you can not
make those same mistakes.
Exactly. Now, so then last but not least, we've got our event this weekend, Friday, Saturday, and Sunday, and it's where we teach you how all the things that we do to run our real estate investing business as a business, what we do in marketing, what we do in hiring. I mean, all the business processes, all the systems that we put in place. It's not just the transaction; it's about how to run it as a business. And then we're also going to be talking about our passive investor network at the weekend retreat as well. So if you want to get involved, you're not looking to build a real estate business, but you're looking to add real estate investing to your portfolio, come to our weekend retreat. Friday, Saturday, and Sunday. Spots are filling up fast. RightPathRealEstate.com. Got to go, guys. I'll be in here with Build Your Team Thursday tomorrow.
All right, fellas, have a good day.
All right, thanks, you too. Bye.